Welcome.
I appreciate it. Thank you. I appreciate you having me here again. That's going to be a tough presentation to follow, but I'll try to do that. I know that a lot of you folks know me, so you're probably really surprised that I'm actually wearing a shirt and not my Bruins jersey. But I've decided I wasn't gonna make any comments because as a typical Boston fan, we don't actually think we're gonna win until we see it. And even then, we're not sure if it actually happened. So yeah, so I'm glad to hear that I have 45 minutes. I thought I was only have about 30, and I only prepared 43 slides for that 45 minutes, so. Oh, including the Q&A. Oh, and on top of that, by the way, so FEA has been working on something for 3 years now, and we're really, really excited. We're actually unveiling this here at Montreal Wood Convention, so we have a booth upstairs. You can learn more about it, but at the end, I think I'm gonna do it after the Q&A, I'm going to actually tell you guys what this is. So this is a little teaser. I'm an economist, not a marketing person, so I'm not sure if I'm doing this right, but stick around till the end. And then you can see what it is that FEA has been working on that a lot of people in the industry I know already are really excited about. It's just the only people who know are FEA and about 100 of our closest friends. So I think a lot of you folks probably do know. So yeah, so what I'm gonna talk about the global lumber markets. So I'm gonna go through each region, talk about what the demand is, then I'm gonna talk about the supply and the implications for trade. So I do have a few slides on the overall economy. So I'll probably go through those pretty quickly. We basically agree with Benjamin in terms of our outlook for the overall economy. So before I start, I just want to put into perspective when we talk about the global lumber markets, who are the important players in these markets from a demand and a supply side. So if we're looking at this from a consuming perspective, the three main consuming regions are the US, Europe, and China. So they make up the vast majority of consumption around the globe. If we're looking on a supply side, from the supply side, it's those same three countries, plus we have to add in Canada and Russia. And as you can imagine, there's a lot of things going on the supply side in Canada from a timber supply perspective and in Russia from a sanctions perspective that are impacting two of the major supplying regions. So we'll talk about that and the impacts of that on trade going forward. So you'll see a familiar pattern as I go through my presentation. I'm gonna put up a lot of charts, a lot of numbers. Some of the slides I'll go through fairly quickly, but this is just giving you an overall perspective of the global lumber markets from a consumption perspective and where we've been historically, where we see us going. So you can see from this slide that we did see global consumption slip in 2022, and we see it slipping again in 2023. So we're not looking, when you start looking at things from a global perspective, there's so many countries around the globe that are affecting this that it kind of washes out. So we can have some strength in some countries which are gonna offset some of the weakness in other countries. You'll see in the next couple of slides that a lot of this decline is being driven by the decline in North America, most of which has already actually occurred. So that's kind of baked into the cake. So that decline in the US, you can see in this graph, that's the red bottom line. There's gonna be a decline in Russia, obviously, so Russian economy is slipping. We've seen a decline in Europe as well, coming down, and that's being partially offset by some growth in China. So, and I'll get into that, but the Chinese growth, we're not going back to where we were. We're just some pretty tepid growth, actually. So let's go through region by region. So US and North America in particular, we do see consumption coming off this year. Like I said, it's kind of already baked into the cake. So it's, we see it coming off on an annual basis by somewhere around 4 or 5%. And then we see next year bouncing back some. So this is really in agreement with what Benjamin had talked about. Sort of medium and longer term, we're actually quite optimistic about our markets. Short term, meaning this year, we do see a decline. I'll go through these next set of slides pretty quickly because, like I said, I do have a lot of slides and I do want to get through them. But so we do think that there's going to be a recession. We think that recession is going to be mild. So if you look at this graph, you can see 0.9% growth in our recession year, and that compares back to much sharper recessions in our previous two. So just out of curiosity, because this is something that I think about occasionally, How many of you folks have been working for more than 20 years? Okay, so it's about half of the room, actually slightly less than half the room. So think about this. So if you've been working for fewer than 20 years, the only two recessions you've experienced were the Great Recession following the housing crisis and the recession that occurred because of COVID. So your only experience are the two worst recessions since the Great Depression. So for a lot of folks, the majority of the folks in this room, you may think that's a typical recession, but a typical recession is actually a lot more mild than the recessions that a lot of folks in this industry have lived through. So just kind of keep that in mind. We see this current recession as typical, or actually even slightly less dramatic than a typical recession, and certainly nothing like the past two that we had experienced. So, but still, recession and housing markets are going to turn down, and I could go into a lot of the reasons as to why, but I tried to just consolidate it all into one slide, which is just affordability. So if we look at how much it costs to own a median single-family home in the US, to purchase a median single-family home, that cost has gone up 40%. Over the past year and a half. So at its peak, if you go to that sort of peak point, it was about 55%. So we're looking at, it's just a lot less affordable to buy a home right now. So of course that's gonna have a dampening effect on housing starts. Less demand, and so less need to build homes. So we see that in our housing starts forecast. So we're looking for housing starts to drop to about 1.3 this year. It's kind of looking right now like that might be a little bit on the low end, but we don't tend to change our forecast from month to month all that much. And in fact, I recently did a presentation that was to a group that I had already done a presentation to last August, and so I actually put up the differences between our forecast between August and April, and there's very little difference. We had consumption coming off 6% in August, or 5% in August, 6% now. We had housing starts at about 135. We have 1.3 now. We had lumber prices coming off by 50%. Now it's 60%. So our forecast, we don't really actually change all that much. So we're kind of sticking with this 1.3 million starts this year, and then a bounce back next year to about 14%. So if you look at this relative to the last recession, the really big recession that we had in the global financial crisis and the housing crisis in the late 2000s, much higher bottom to this downturn. And also, we're going to bounce back fairly quickly, and over the medium term, we're quite optimistic on the overall markets. So why is that? Well, why this high bottom, and why strength going forward in the medium term? Well, there are no homes out there. If we look at housing inventories, this little line right over here, if you guys are looking over here, this 2023, you can see that our inventories are above where they were during the pandemic years, but they're still extremely low. In addition, there's a tremendous amount of pent-up demand. And what is pent-up demand? Well, it's just the difference between the homes that are built versus our underlying demand for housing. And underlying demand for housing, I'm just going to simplify it for the sake of time, but if you think about every year we add 3 million adults to our population, and generally speaking, we have 2 adults per household, so we add about 1.5 million households every single year. So you need to build homes to house those increasing households, those increasing numbers of households. So that's not only what's in this green line, that underlying demand, but that's the main driver of that. So we know we're adding these adults, we know we're adding these households, so we need to build homes to house these increasing households. Yet for the greater part of 15 years here, we were dramatically underproducing the number of homes, the number of households that we were adding. So because of that, there's a tremendous amount of pent-up demand. It's why we've seen it's part of the reason why we saw home prices jump so dramatically. In addition, there are tremendous demographic tailwinds. So what do I mean by that? Well, if you think about when people want to buy a home, when are we seeing a lot of first-time home buyers coming out there? When are people separating out and forming new households? Well, that's generally occurring in your late 20s and your early 30s. So if we look at the current population by age group, you can see a big bulge of population right now are in their 30s, in their early 30s. So this is the prime home buying years. So there's a lot of folks who are out there wanting to form separate households and wanting to buy a new home. This is in contrast to, if you look at the green line, that's where we were in 2008. We actually had a dearth of folks in those prime home buying years. So that's part of the reason why the recession was as bad as it was last time around, and why we don't think this one's going to be as bad. If we look at this graph, just going really far out, obviously room for concern in about 25 to 30 years from now. I'll still be working, but probably most of the people here won't be. But the other piece of good news is that, if we're looking more at a 10-year time horizon or a 15-year time horizon, there's another bulge of folks coming through as well. So again, medium and longer term, we're still fairly optimistic. So we do talk a lot about new residential construction markets because there's a lot of data available for that. But really, the larger end-use market right now is renovations, so improvements, additions, alterations. That's actually a bigger market for lumber and panels than the new residential construction market. We don't talk about this quite as much because the data's not as good. But here's here's a graph of where R&R expenditures are, residential improvement expenditures, and you can see this big jump up. So we are looking for a big drop to occur, but this isn't going to be reflected. This sort of 16-18% drop in expenditures is not going to be reflected in a 16 to 18% drop in consumption, because a lot of these expenditures are not on heavily wood-using applications. So it's an increase in buying refrigerators. It's an increase in fixtures for your bathroom and lights and those sorts of things. So when we see this drop that we're forecasting, we're not looking for an equivalent drop in lumber consumption. We're looking for something a lot closer to about 5 or 6% decline in lumber consumption, about 8% decline in panel consumptions. So, and I think the key here is that we are looking for the residential improvement markets to move back to about roughly trend. So not go below that, even though we're having a mild recession, even though interest rates are higher, and that's because the housing stock is very old. And folks have a lot of money. Households have a lot of equity in their homes, so they can actually be spending this money on their homes. So that's it for the U.S. It's declined this year, starting to go back next year, starting to come back next year. So let's move around to the other major consuming regions around the globe. So we do see 22 as a bottom for China, and we do see Chinese consumption growth increasing from here. We do our forecast. We actually do a global forecast that goes out to 2040. So I don't show it here because who knows what's going to happen in China out to 2040. But what you would see if I did show it was that we'd kind of peak out around recent peaks, and we don't actually see Chinese growth going significantly higher than it has been in the past, which is really different than what a lot of folks have been talking about. All right. So why is that? Why this, so we do see growth. Why the bounce back? Well, China was shut down with COVID. They're starting to loosen their COVID policies. So we do see a little bit of an improvement from where we were in 22. However, from an overall economic perspective, Chinese growth, overall growth is going to be a lot weaker than it has been in the past. So they're looking at an annual growth rate of around 3 to 5%, which is significantly lower than that sort of 8 to 14% that we've seen in the past. And then just simply if we're looking at some of the forward-looking indicators for housing, a main market for our products, you can see that all these various indicators are really pretty negative, and especially some of the forward-looking indicators like land acquisition area. So being down, that's an implication that for the following years that we're not going to see as much growth in housing markets. Another component, actually, which is probably a little bit less talked about, but the shift towards more off-site construction in China, because a lot of the wood that's used in China is used for concrete forming, scaffolding, that sort of thing. And so if we're seeing more units being built off-site and then connected on-site, then there's just not going to be the need for the scaffolding and the concrete forming that we've seen in the past. So that's another reason why we do expect to see consumption being, growth being tepid. Japan, it's pretty big. It's an important consuming region for those of you who are producers on the West Coast. And consumption is really just going to be flat. Not a lot of room for excitement there. If you look at housing starts in Japan, pretty much just flat historically. We had seen a trend, an upward trend in the wood share of homes that were being built. This reversed in 2022, but we do expect that to continue to rise. So all in all, Japan's pretty unremarkable. So Europe is the last of the major consuming regions, and we do see growth. We've already seen growth decline in Europe. So Europe is more affected by the war in Ukraine with the higher energy prices impacting their consumption. So we do see a bit more of a slowdown in Europe than we have seen, than we're expecting in the US. And then a bounce back in 24 as well. All right, so let's now shift away from demand and move towards the production side. So what do we see for production? Well, it's gonna follow consumption, right? Consumption is coming off, so production is going to come off as well. We do see a greater decline in Russian consumption than in other regions of the world, and I can show you that. A greater decline in Canadian consumption as well because of fiber supply constraints, which I'll talk about. We also see a decline in U.S. Production as well. So U.S. production, U.S. consumption is falling, which are the bars, and we do see production coming off with that. So perhaps a little surprising for folks who know what's going on the investment side. Just before I go there, I do also want to point out that we've seen imports. This little red line is imports. U.S. is a major importing region. We do see that coming off, which may be a surprise for you folks who are competing with European imports in the U.S. markets. You may say, wow, I thought there's a lot of European imports coming in the U.S. markets. How can this be coming down? Well, that's total imports. That includes Canada. So that's why that's coming off. I'll show you the breakout in a second. But in any case, we have production coming off, and that really may be surprising for you folks if you've been following these markets at all and know what's happening with capacity. Because if we look at the 19 to 21 period, we've added about 5 billion board feet to capacity. If we look going forward, which are these next three slides do, we're adding another 4 billion board feet to capacity. Almost all of this is in the US South. So how can we have production coming off if we have all this capacity coming online? Well, part of it is just simply because of market conditions. So what this graph shows is the cost, the variable cost to produce lumber versus the price. And then the green dot shows the average sales price to cash cost ratio. And that's on the right-hand scale. So, right-hand scale. Yeah, so that solid line going across the middle, that's the break-even point. So on a cash cost basis. So you can see that, for all regions except for the US South, we have mills are at best break even on a cash cost basis. They're still losing money on a fully loaded cost basis, but at best breaking even on a cash cost basis. And when I show you the production declines in Canada, this is going to be part of the reason why, because if we're looking across Canada, there's two major producing regions are losing money right now, and one is losing significant amounts of money. Because of this, we've seen closures. We've seen mills cut back on their production. So, and this doesn't include the announcement today, I think from Tolco, that they're taking another shift down as well. So this is shift reductions and closures, and then there's temporary curtailments as well. And when we add all of these up, the actual production that's been taken out just from these announced, not annualized, just from these announced closures is about 2.1 billion board feet. So it's a significant amount of wood that's come out. So that's sort of near-term market conditions driving down production. But then longer run, we have issues as well. So if we look, so what is the longer run, what's the longer run productive potential for the industry? It really comes down to three things: labor, iron in the ground, and timber, right? So labor can be solved fairly quickly because you can increase your wages, you can draw people in. Still has a bit of a time lag on that. Iron in the ground takes a little bit longer. Because you got to, bid group. You got to hire a bid group to come and build you a new mill. So, and that's going to take you a little bit longer too, because pretty much everybody's been doing that for the past 3 years. So, those time frames are out as well. But the wood, the timber in the ground, that takes you decades to grow. And if you don't have that wood, it doesn't matter how many mills you have, and it doesn't matter how much labor you have, you're not going to be producing lumber. So what's the fiber situation? Well, if we look across the various regions, if we look at the US West Coast, their supply is actually going down. And I'm not sure how many of you are familiar with this. We've been talking about this for a while, but we had the Labor Day fires back in 2020. We have the losses from the private forest accords and the forest changes of the forest practices codes, and that's simply a lower outlook for public supply from the state lands there. So this has led to about a 10% decline in the sustainable yield. So that translates into 5 to 6, well, it depends on who you're listening to, but from a billion board foot basis, it could be 500 million board feet of lumber that's potentially at risk to coming out because it's just not, they're simply not going to have the fiber. If we're looking at the inland region, not a similar story in terms of a loss of potential supply, but just simply it's really slow growing timber there. Just not a lot of room, and given the current capacity, we're pretty much at balance with demand and supply, and increases in demand are going to start to exceed potential. So the harvest will start to exceed growth, and that means you're harvesting unsustainably, and so your inventories are going to come down. And industry is not going to do that for a while, and to the extent that they are, the timber prices are going to go up. So that really leaves the U.S. South as the only region that has any excess supply if we're looking at the U.S. So I think we all know those stories, piles of excess timber down in the U.S. South. So that's why we've seen so much investment go in there. In fact, if we look at if we look at the 19 to 21 period, like I said, we had about 4 billion board feet, if we're looking just at the South, of announced capacity expansions. So we've had that tremendous amount of investment. What's been happening with that? Well, if we look at production on a region by region basis and what's happened, production in the South is only up about 1.4 billion board feet. So you have tremendous investment, mills that have been completed, but production has not gone up by very much. Why is that? Well, this is back to 2022, right? So in 22, in the first half at least, we still had really high lumber prices. So you would think that given all that new capacity that came on between 19 and 21, that we'd actually see much greater increases in production, but that hasn't happened because of labor force constraints. So in the old days, it would take 8 to 12 months to ramp up a mill. Now it's taking 3 years to ramp up a mill because you can't get the loggers, you can't get the truckers to bring the logs to the mills, and then once you're at the mills, you can't get the woods at the mills, you can't get the workforce to actually ramp up to nameplate capacity. So it's taking much longer to get to nameplate capacity than it has in the past. Why is that? Well, these modern mills are high-tech, they're high-tech mills, and in the old days, so currently in a mill that's being built today, you're looking at a labor force that's about half the size of a legacy mill, or even less than that. And so the workers that are needed are skilled laborers. And these skilled laborers, you're competing in rural areas with other folks like Boeing and like Mercedes and other higher tech industries who are paying a lot of money. So it's difficult to get labor to come in and work for your mills. So we think this is going to continue to be an issue, and we think that operators are going to continue to have a difficulty reaching their nameplate capacity over the next couple of years. So the bottom line on all this is I wouldn't be quite so worried about the 4.5 billion board feet of capacity that's slated to come online over the next couple of years, because it's probably not going to be that. The production's not going to be able to reach that. So I did talk, so that's the production side for North America, or for the US, I should say. And I did mention that imports were coming off. So this graph just shows imports by total imports, and you can see that those are coming off a little bit, but most of that decline, well, all of that decline is declines from Canada. And so if we break out the non-Canadian imports, we see that those are actually up significantly. And you can see that the vast majority of that is coming in, oops, wrong way. The vast majority of that is coming in from Europe. So if we actually break out Europe from other importing regions, you can see that, yep, the vast majority is from Europe. And so what do I do here? So the blue and the yellow are just imports in billion board feet. And then the red line, I wanted to show the perspective of just how big the European imports have grown relative to the Canadian imports, right? Because everybody thinks about Canadian imports as being, Canada as being the main importing region for the US, or the main exporting region into the US, and it is. But Europe has grown to Europe in January had grown to nearly 50% of the shipments into the US that Canada was sending. So Europe has become very, very important. Well, why is that? I'm going to get into that in a second. I do want to point out that February absolutely coming down, March coming down as well. So European imports are going to start to fall. And so there's a number of reasons for this, but one is the low prices is making it less economical. A second reason is that some of this increase in imports was actually due to logistical constraints in the latter part of last year, and those constraints were relieved, so we started to see wood getting shipped that probably would have been shipped a little bit earlier had it not been for those constraints. So why are we seeing a greater increase from Europe? Well, delivered into the North American markets, Europe is at the low end of the cost curve. So this is why if you're playing in the, I can't read that, so I have no idea. It says 5? Okay. All right, now I've only got another 10 slides. Yeah, so anyhow, Europe is at the low end of the cost curve. And the reality is this data, this freight data, this is, probably a month old. And in a month, we've had a pretty big drop. Well, I know it looks right here like you have an increase, but the actual shipping rates have been coming down and continue to come down. So we'll continue to see a decline in those European costs landed into the North American market. So we'll go through the rest of the regions fairly quickly. I do want to spend a little bit more time on Europe from a production perspective. But China, we are going to see consumption exceed their potential growth in domestic production because they don't have timber there. So we are going to need to see increased imports. Where historically have those imports come from? Well, you can see that yellow, if you go back to 15, was from Canada, but they have shifted from Canada over to Russia. And so now Russia is really the main supplying region. So we do expect to see increased Russian exports to China. And that is in part because of increased demand from China, but it's also in part because of sanctions on Russia and their inability to ship to other regions and Western countries in particular. Europe is a different story. We do see production in Europe exceeding demand, and so we do see their exports increasing or being flat. Why is that? Well, I think everyone in this room knows about the mountain pine beetle. A lot of you have lived through it, and what that did to production in British Columbia, and also what it's doing to production, the aftermath of that, what that's doing to production in British Columbia now. And so if we overlay the volume killed of the European spruce bark beetle with the kill of the mountain pine beetle, you see a very similar pattern, right? We see that so what this shows you is volume killed on the y-axis, the vertical axis, and on the horizontal axis, it shows you years since inception. And you can see that a very similar pattern. So we see a big increase in production in Europe. We think that's going to continue, in particular, because the beetle and the amount of spruce that's killed is pretty correlated with the heat and moisture that they experience. And 2022 was a very hot, dry year, so we do expect to see a lot of kill coming out into the markets. Going forward, though, if I go backwards to go forwards, we do see spruce kill starting to come off. So if we're looking out to the middle to the latter part of this decade, global markets are going to start to lose that European supply. We think it's why you're seeing companies like Binderholz buying mills in the US, because they're located in Central Europe. They know what's happening with the timber supply there, so they're trying to get out in front of that and get access to some of the fiber that's in the US South. Oh, good. I combine these, so even though they're two of the main producing regions, but it helps time-wise. So we do see production, consumption in Russia is really small, so it doesn't really matter all that much. From a global perspective, production they are an important player. Because of sanctions on Russia, we do see their production coming off sharply and as their exports decline. So that's really going to be an export-driven, a lack of demand for their exports driving down their production, whereas Canada is a different story, and that's a lack of supply of fiber. So in terms of exports from Russia, you can see that, so that's the right-hand graph. You can see that China is the main region for their exports. followed by the CIS, the Central European, the former Soviet states in the south. MENA is important, and Europe was important, but with sanctions, you can see in the graph on the left that this is 22, so the sanctions didn't come into effect until after July. So they still had half a year of exports, but now we're looking for quite lower exports to Europe, and so that's really going to drive down those Russian exports. In terms of Canada, this is really more of a fiber supply situation. Again, this story I think is pretty well known. What this graph shows is the annual allowable cut in British Columbia. So we see the decline that's already taken place, and we do see further declines coming in the middle of this decade. That's related to some mountain pine beetles, some the wildfires that occurred in 17 and 18. In addition, there's going to be habitat set aside for the mountain caribou or the woodland caribou. And this graph doesn't actually take into account forest tenure transfers to First Nations or the old growth deferrals. So further reductions coming. In terms of Eastern Canada, it does look like there's quite a bit of room. This is your annual allowable cut, and here's your harvest levels over the past few years. It does look like there's a lot of room for growth from just a pure fiber supply perspective, but that wood is far north. It's in mixed stands, so you have hardwoods in there with your softwoods. It's smaller, so you have an increase in residuals when you're producing lumber. You're far from your markets. So there's a lot of reasons why that wood is likely to be uneconomically accessible. So we do expect to see growth in Ontario and Quebec in terms of their production, but not really make up for the 8 billion board feet of loss from Western Canada. So take-home points, demand's going to fall in 23. It's already happened. We do see demand coming back next year. Global supply chains are disrupted, so we're going to see less wood coming from Russia, and we're going to see more wood coming out of Europe in the short term. So I think one of the things I like to just sort of to put this into perspective, if we're looking at this longer run, demand for our products are going to grow. It's a green product. We all know about that. It's it helps to solve our climate crisis that's going on right now. So I think there's going to be more demand, certainly more demand for wood. And then if we look across the globe, where is their supply of timber? There are two regions where there's supply of timber: the U.S. South and Russia. And the Western world just took one of those regions of supply out. So that's Russia. That's no longer available. And in the U.S. South, we have labor supply constraints that are slowing the growth in potential output there. All right, I couldn't just help myself. So again, don't want to get too cocky because we've only won one game, but the Bruins did win. And how good was that to come home from dinner last night and turn on the TV? I gotta admit, boo, a lot of you guys have to be happy about that. And then the best part is, why did the Canadians win so many games, right? I mean, they tried hard. So your chances of getting Bedard. Anyhow, don't leave, because I do have one more thing to tell you, but I will open this up to questions. Hopefully, if you guys are getting the mic, you guys are better catchers than Samsonov.
Thank you so much, Paul, for taking the challenge. We'll remember that. 44 slides in 30 minutes. You're good, you're good. We don't have any questions yet on the platform, so in the room, let's go in the room first.
Oh, you guys all want to see what it is that we're announcing. You don't want to wait.
Okay, there's one over there. Could you please stand up? Oh, a real mic.
Oh, yeah, this is nice. Can you guys hear me?
Yeah, closer, please. It's going to help.
Is this better?
Sure.
Perfect. Yeah, so I'm Andrew with Pikira. Some of you have heard of us, bring the industry together. I'm talking to people from all over the supply chain, all over the world, all the time. I'm always seeing surprising markets that are booming. Like in the Middle East and North Africa, as everyone's moving out of Ukraine, they're now looking and building homes in these markets, whether it's wood pellets, and seeing new supply coming on in South America. What sorts of kind of surprising, kind of booming markets are you seeing out there, and is any of that supported in the data? that you've.
Yeah. So sorry, I I didn't want to have 60 slides, so I left MENA and and India and South America out. We do cover all those regions. So so the surprises that are coming along, I suppose. Well, I'll just say it's not so much of a surprise because we kind of knew about this. But if you're on a forward-looking basis, countries like India, I don't know, most of you probably know this, but India's population surpassed China's. So that's a growth region. Lumber demand is not typically a region where you've seen a lot of softwood lumber being used. They have all sorts of logistical issues in terms of their roads and infrastructure to get the products in from the ports, but that's a potential area where we could see some growth. MENA, so the Middle East and North Africa, major consuming region, especially for the Europeans, more so than for the North Americans. But that's another region that if you're looking at population growth over the next 20 to 50 years, that has the greatest population growth around the, greatest population growth potential around the globe. So that's another region that's going to be increasing demand. And on top of that, historically, they've been a market for low-grade timber, but they're starting to, the grade of timber that they're looking to get, or the grade of lumber that they're looking to import, is improving. And then in terms of South America, South America is mostly self-contained in that they consume most of what they produce. So one of the things that we do see happening, though, is that with the we do see some of the plantations and the softwood plantations being changed over to hardwood for use for pulp. So that's a region that we could see going forward, sort of less supply availability. So there's a quick version of that.
Thank you.
Thank you. Please don't throw this mic in there. We have this one. Any other question, please? We have time.
Oh, we
kept time for you.
Okay.
Of course.
Thank you.
Okay, I'm checking on the platform. Sven, would you have any question? No? Okay. Okay.
I did a good job of answering all your questions ahead of time.
So if there's none, do you want to add something that you couldn't present?
So I didn't, is it possible to get this up on the screen? I have it here.
Your special announcement?
This is our special announcement. Like, I'm not great at this, but.
Okay.
Hello and welcome. We are incredibly excited to announce a project we've been working on for more than 3 years. I'd like to introduce you to Forest Economic Advisors' new price service, Price Pulse, North America's first transaction price report for wood products. This data-driven platform revolutionizes price discovery within our industry. There is no approximation, no uncertainty, and no one talking their book. The transparency and accuracy of Price Pulse makes it a game changer for lumber and panel price information. Unlike editor-based price reporting models, there is no human contact with the data after it is entered into a company's ERP. There is no human judgment involved in assessing a price. FEA's Price Pulse only uses the prices of actual transactions that have occurred and weights them based on each transaction's share of the total collected for each product and grade. You may be wondering, how exactly does it work? Every day, data suppliers' ERPs create files containing all open market transactions. These files are sent securely to our dedicated server. Transactions are automatically mapped from the data supplier's codes to FEA's product prices. Average weighted prices are calculated, and only those prices with a minimum number of participants will be published to protect companies' identities. Want access to Price Pulse each week? Want to provide feedback and help shape the service? We hope you'll join us. Reach out to Crystal Gauvin to find out more about how you can keep your finger on the pulse of the market and get involved.
So thank you guys for taking the time to listen. We are very excited about this. We have, like I said, we've been working on this for about 3 years now. We have heard from a number of people in the industry that they want to have an alternative to the traditional methods that are out there. So we've invested a lot of time and effort, and quite frankly, there's a number of people in the industry who've been very supportive. Just so you folks know, we do have about, we're pushing up towards 60% of the industry is supplying us with data at this point in time. So this is not something that is not heavily supported in terms of the actual data that's going in here. We have millions of transactions that are going into this system. So we have very good coverage. We have a booth upstairs if you want to talk about it, and we also have a suite where you can come if we can show you more details. So anyhow, thank you so much for taking the time to listen, and I look forward to talking to you all over the course of the rest of the conference.
Thank you, Paul. Thank you.